Now here I'm combining all of the transactions that were analyzed in the accounting equation in the previous two videos. So I'm combining all of these or aggregating everything so that we can see the accounting equation at a macro level. So on the left side of this equation here, we see that, well, before the equation, we have all of the transactions here that occurred by the company. And we see that the three accounts that were affected that were classified as assets were cash, equipment, and office supplies. And so, like I mentioned, when it comes to illustrating the accounting equation, how it works based on analyzing transactions from a company, I wanted to just start off with cash transactions because it is easier to see the movements of transactions that occur in a business. So that's why you can see here on this column here, cash column, we see that every single transaction that occurred affected the cash account. So you see that there's some cash that was increased, decreased, increase, decrease, increase, decrease, decrease. All right. So that's just showing us the cash inflows and outflows that occurred in the business. Okay. So very dominant account. And it's like this in the real world too. Cash means everything. All right. So if you don't have the cash, then there's a problem. So this is why cash is very important and which is heavily used, which is what you see here on the screen here in the accounting equation. Then we move on to equipment. Equipment shows a positive $30,000. Office supplies a positive $500. Then on the right side of the equation, we have no liabilities. So the company didn't incur a liability, which is great. But as companies do get big and bigger and bigger, eventually they will take on some debt or some liabilities to help them fund their operations. Then we have equity. Equity, we see that there are four components of equity, and each one were used given the transactions that was analyzed for Bob's Consulting Company. Owner capital had a positive $50,000. Owner withdrawals, a negative $1,000. Revenues had a positive $110,000 combined, and then expenses had a negative $4,300. So when it comes to the accounting equation, we have to make sure that the left side equals the right side and vice versa. So if assets have $100,000, liabilities plus equity must also have $100,000. If they do not equal each other, if it's $100,000 on the asset side and then $99,000 on the liabilities plus equity side, you are wrong. You have to go back and figure out what happened. It could be a typo, whatever it is. It's an error on your part that needs to be fixed. Okay. So not to mention that you have to make sure that, yeah, you can be balanced. But if you, I want to say, put a plus $500 in the wrong account, then that's also an issue as well. So this doesn't confirm accuracy of the accounts that are, I want to say, of the accounts that needs to be used. This just confirms the dollar amounts. You have to confirm that you are putting these amounts in the right accounts. So now, when we add up everything on the assets column and the liabilities plus equity column, they again should match. But starting off with the assets column, we have here on the cash column here, all of these amounts here that's under cash came out to be 124. Oh, let me change the font color on this. I don't want to use red. So it was 124. So $124,200. That's cash. And then we're going to bring down the $30,000 from equipment and also the office supplies of $500. Okay, when we add these three amounts up, 124,000 plus 30,000 plus 500, that gives us $154,700. Okay, so that's our total assets, which should match our total liabilities plus equity once we run the numbers. So on the right side, liabilities, we just have zero. Okay, we don't have to do anything there. Equity, though, we do, because this is where our $154,700 will this is where it will reflect. Hopefully, fingers crossed. So owner capital, we bring it down. That's plus 50,000. We bring owner's withdrawals down. That's a minus 1,000. Then we bring the revenues down. That's 110,000. And then we bring expenses down. That's 4,300. So when you add 50,000, subtract 1,000 plus 110,000, subtract 4,300, you will get, yes, $154,700. So the left side does equal the right side and vice versa. And that's the goal.